I think that gold will find a bottom and find a base, and it will do what it always does. In 1999, gold was $200, $100 an ounce. I mean, now it's 2,000 basically. So again, it will rise in time.
Link it back to your gold now. So your thesis is higher inflation and potentially a slowdown in the global economy, which is already happening, by the way. So I guess that means stagflation, but gold doesn't seem to be reflecting that, at least not recently. We've had 2 drops in a row, significant drops, 1% on Friday, another 1.5% today. It's certainly not acting as a safe haven against all these equity markets declines. So why is gold not behaving as you would expect it to hedge against higher inflation, hedge against equity volatility, and so forth?
Well, first of all, gold is never a hedge against equities. Okay, that's a misnomer. Gold is a hard asset. It's a hard asset commodity that is under some pressure in here. But remember where it just came from. It was under 1,800, and we're still up almost 1,900, and we're at almost 2,000. I think today and the last couple of days, because of the dramatic selling in equities, you're seeing basically just sell everything, get me out of everything, or I'm selling gold to finance some other positions that I have on. I think that gold will find a bottom and find a base, and it will do what it always does. In 1999, gold was $200, $100 an ounce. I mean, now it's 2,000 basically. So again, it will rise in time. We cannot look at markets from second to second based on what they're benchmarked against or what's going to drive them. Right now, you've got a little bit of a panic going on, and they're selling everywhere.
Right. Do you think the announcement by Jerome Powell last week about the quickening of Fed rate hikes has anything to do with gold's drop over the last 2 days?
I don't think so. I don't put a lot of stake into that news. I got to say to you, David, that I believe, in my opinion, all of that news has been priced in all along. Anyways, everybody knew they were going to have to raise rates fast. So I don't think this has really caught the markets by surprise. I think that people look for a reason for why the markets are going down. The reason markets are going down is because they're in trouble, because they've been setting up for this down move for quite a while. Just look at the volume. Look at the volume in gold. It's very light in comparison to the amount of selling that you're seeing. Look at the volume in equities. It's getting heavier, but it has been the most ridiculous volume I've seen in 44 years as a trader, which was just telling me that they were allowing retail traders to buy before they whack them. And that's what I think we're starting to see.
You haven't seen what exactly in 44 years in your career?
I haven't seen this lack of volume in markets and this lack of participation in 44 years.
In the gold market?
In any market.
In any markets. What are people doing? They're on vacation, or what's going on?
No, you're seeing a lot of the institutions, funds, and commercials are letting their retailers step in, and they're cracking them, which is why I think we're seeing this meltdown. Again, I think that there's positioning and playing the markets the way they are and following the price action. And since we've subsequently made lower highs, that just shows that we're certainly in a significant downtrend.
Okay. And gold, let's give your gold price outlook for, I guess, for the short term, and then I guess for the rest of the year as well.
I think gold will make new highs this year. Again, this to me, what's going on now was predictable when it failed to take out 2,000. It was above it for a few minutes and it could not take it out. I think that it'll find a bottom sooner and will start to move higher. And I could see new highs in gold before the year is out. And I expect to see silver to make a nice run. Now, I don't think silver's going to make new highs at $50, but I do think silver will be over 30. And I think silver is going to start to make a run. And I think even the biggest dog of the metals complex has been platinum. And I think that'll start to make a run. But right now, they're just under pressure.
And what are the biggest macro forces behind this bull run in gold and silver later on in the year, you think?
Well, I think it's going to tie back to some of the inflationary issues that you're talking about today.
Okay.
It's going to tie back to people are going to be looking for places to invest their money. Okay. And of course, I'm a big believer in buying gold. I think that you have to be able to buy what you can afford, then store it or take delivery. I think the paper gold is what causes a lot of these bigger swings, because paper gold is I don't think there's enough gold in the world to cover all the paper that's out there. And I would never own paper gold if I was looking for a long-term protective investment, because listen, at some point in life, gold, silver may be needed as a currency. Okay. Just remember that. I'm not saying it will be, but that would be another reason to own the precious metals.